Hello, my name is Nikita Veremeev, and today we are going to deal with a very interesting question. Why is gold going faster than Bitcoin? A couple of years ago, many experts were sure that Bitcoin would finally supplant gold as the main protective asset, but the beginning of 2025 has made its own adjustments. While the crypto market was reacting wildly to economic news and exchange rate fluctuations, gold was steadily moving upwards, updating historical highs. Let's break down the main issues of this trend. Who is now actively buying up gold, and how does this affect its value? Why is Bitcoin, even though it is institutionally recognized, not showing similar growth? Can Bitcoin really replace gold in the future, or it is just another hypothesis? This video will help you understand which assets are better to keep in your investment portfolio, how does the global economy affect precious metals and cryptocurrencies, what will be the long-term trends in the investing. Subscribe to the channel, give us a like and write in the comments. Which asset do you consider more reliable, gold or Bitcoin? Before we get into the difference between gold and Bitcoin, let's take a look at who is buying up gold on this scale and why. In 2024, demand for gold reached 4,974 tons, a historic record. The world's central banks are buying more than 1,000 tons of gold for the third year in a row. This process accelerated in the fourth quarter of 2024 with 333 tons of the precious metal purchased. Why gold? The answer lies in economic and political stability, insurance against global financial risk. The world economy is going through a difficult phase right now. For example, the introduction of new trade duties by the US in the early 2025 has triggered a new wave of sanctions wars. As a result, the exchange rate of national currencies of some countries began to decline, and stock markets became more volatile. Central banks of different countries are reissuing themselves, increasing their stocks of real assets. Gold, unlike fiat money, does not depend on the policy of central banks. It cannot be printed, which means that it remains a reliable instrument of capital protection, reducing dependence on the US dollars. In recent years, many countries have begun to reassess their foreign exchange reserves. While the dollar used to dominate global financial transactions, countries such as China, Russia, India, and Middle Eastern nations are now reducing their dependence on the dollar and increasing the shares of gold in their reserves. Let's look at the numbers. The share of gold in China's reserves has increased by 60% in the last 5 years. Russia's central bank has bought over 200 tons of gold in 2024 alone. Saudi Arabia and United Arab Emirates are gradually increasing their share of gold to reduce their dependence on Western currencies. Thus, we can say that global de-dollarization is now underway and gold is becoming a key asset for the financial stability of nations. Inflation and economic instability. We all remember how central banks printed trillions of dollars, euros, and yuan after the pandemic. This led to rising inflation, which the world is still struggling with today. Despite attempts by the US Federal Reserve and the European Central Bank to control the situation, inflation remains above target in most developed countries. Now the question: what does gold do in times of high inflation? It goes up. Historically, gold has always outperformed inflation. For example, in the 70s, when the US was experiencing stagflation, gold rose 500%. In 2008, after the financial crisis, the price of gold doubled. In 2020, during the pandemic, gold again broke records. We see the same thing now. Investors are hedging risk and choosing physical gold as a safe haven against the depreciation of money. Key takeaway: gold is a conservative but reliable asset that is being actively bought up by governments, banks, and major investments. Unlike Bitcoin, which is still perceived as a risky asset, gold remains the standard of stability. Now, let's deal with Bitcoin. Unlike gold, it is called digital gold, but it can't replace it yet. Why? At first glance, 2024 has been a very good year for Bitcoin. Bitcoin ETFs were approved, allowing institutional investors to enter the crypto via traditional financial instruments. Large funds such as BlackRock and Fidelity began to actively include Bitcoin in their investment portfolios. Major banks have begun offering Bitcoin storage and trading services to customers. But despite this, the growth of Bitcoin is significantly inferior to gold. Why? Volatility and low investor confidence. Bitcoin is still extremely volatile. This is the main reason why it cannot fully compete with gold as a protective asset. Whereas gold rises slowly but steadily, Bitcoin can first rise by 20% and then crash by the same 20% in a couple of days. In March 2024, Bitcoin surged to $73,000, but a month later fell down to 60. For institutionalizers, such spikes are a signal of high risks. BlackRock and Fidelity in their recommendations advise to hold no more than 2-3% of Bitcoin in a portfolio. This proves that Bitcoin is not yet perceived as a replacement for gold, but it is just an additional diversification tool. Regulation, restrictions and legal uncertainty. Gold can be bought, stored and sold without complex legal restrictions. At the same time, cryptocurrencies still face strict regulation in many countries. US. The SEC approved Bitcoin ETFs in 2024, but continues to heavily regulate the crypto industry. A number of states are tightening taxation on cryptocurrency transactions, making Bitcoin less favorable for investors. Euro. Regulators introduced MiCA, the world's first unified cryptocurrency law regulation that regulates crypto exchanges and wallets. However, enforcement varies from country to country, creating legal uncertainty for businesses. In China, Bitcoin and other cryptocurrencies are officially banned, though citizens still find ways to own them. Russia and CIS. Cryptocurrencies are in a gray zone. They are not banned, but their use is severely restricted in payments and businesses. Thus, regulation creates barriers to mass adoption of Bitcoin, which is not the case with gold. Institutionalists are on hold. Who will buy Bitcoin? Who is buying up Bitcoin? Unlike gold, which is actively bought by central banks, the main players in Bitcoin markets are private funds and investors. However, 2025 is very important for Bitcoin. If major central banks start buying Bitcoin, that will be the tipping point. So far, no central bank is holding Bitcoin in their reserves. For example, the US Federal Reserve has $500 billion worth of gold and $0 of Bitcoin. This shows that for global finance, Bitcoin is still an experiment. Key conclusions: Bitcoin is a promising asset, but it cannot yet fully replace gold because it is too volatile. It is not included in the official reserves of central banks. It faces regulation and legal barriers. How does gold signal a possible crisis? Gold is not just a metal. It is a barometer of the global economy. When it's actively rising in value, it can signal impending problems. Let's break it down. Why does gold always rise in times of economic instability? What historical examples show that rising gold prices have preceded crises? Can we use the dynamics of gold as an indicator of economic turmoil? Historical examples: gold as an alarm signal. Gold has risen sharply in price several times in history before global crisis. Let's look at the key points. 70s. The collapse of the Bretton Woods system. In 1971, the US canceled the dollar pegged to gold, causing paper money to lose value. Inflation skyrocketed and gold soared from $35 to $850, announced by 1980. At the same time, the US was facing stagflation, rising prices with a slowing economy. 2008-2011 global financial crisis. In 2008, the market crashed and investors started looking for a safe haven. Gold went from 800 to 1,900 an ounce in 3 years. Its rise was a harbinger of the global financial crisis. 2020-2022 COVID-19 pandemic and liquidity crisis. In March 2020, markets collapsed, but gold quickly recovered and rose to 200. This signaled that the global economy had entered a zone of high uncertainty. If gold starts to rise on its own without being tied to other assets, it's a worrying sign. Investors are running for crisis protection. 2025, a new round of global growth. What does it mean? Now let's look at what's happening right now. In the first weeks of 2025, gold hit a new record and rose to 2,950 an ounce. What could explain this rise? Global economic instability, US-China trade wars, heightened fears of recession. Donald Trump's imposition of new customs duties threatened EU and Chinese economies. US stock markets are at record levels and investors fear they are overheating. Rising inflation and debt loads. Despite attempts to control inflation, prices of goods and services continue to rise. The US, EU, and Japan have record levels of government debt. Central banks can't raise rates quickly because it would cause a debt crisis. Central banks keep buying gold. Central banks bought a record 4,974 tons of gold in 2024, the highest ever. China, Russia, India, Middle East actively building out gold reserves, reducing dependence on the dollar. When gold rises separately from the stock markets and cryptocurrencies, it may indicate that major players are preparing for a possible crisis. Why isn't Bitcoin showing a similar rise? If gold is rising sharply in price but Bitcoin is not, this is an important signal. First reason, investors still don't see Bitcoin as a safe haven. Despite institutional recognition, Bitcoin does not show stability in times of crisis. Unlike gold, which is bought by central banks, Bitcoin remains an asset for funds and private investors. Second reason, Bitcoin remains too volatile. Bitcoin can fall sharply on news of regulations or market turmoil. For example, in 2024, the exchange rate soared after positive news about ETF approval, but that began a 20% correction. The third reason, Bitcoin is not really gold. It combines traits of gold, currencies, and high-risk assets, but is not yet replacing any of them completely. Institutionalists hold Bitcoin in minimal proportions, typically 2-3% of portfolio versus 10 to 15% of gold. As long as Bitcoin continues to evolve as an investment asset, gold remains the only real safe haven for global capital. What should investors do? If gold is signaling a potential crisis, then it's time to rethink your strategy. Should we increase the share of gold in the portfolio? If history teaches us anything, gold proves to be the best insurance in times of economic instability. It is chosen by central banks, funds, and governments when the economic outlook worsens. What about Bitcoin? Despite its volatility, Bitcoin remains a promising instrument. If you want to diversify your portfolio, Bitcoin can be a complement but not a replacement for gold. Key takeaway: gold now plays a key role in a capital protection strategy. Its rise is a signal that cannot be ignored. Bitcoin is called digital gold, but can it really replace physical gold as the main protective asset? To answer this question, let's break down the key differences between Bitcoin and gold, their long-term prospects and potential risks. What do gold and Bitcoin have in common? Both assets are seen as alternative means of preserving value. Both are limited in quantity. Gold is a physical resource whose supply is limited by nature. Bitcoin algorithmically limited to 21 million coins. Both are independent of central banks and fiat currencies. But despite these similarities, there are many more differences. The first one, historical relevance, gold, used by mankind for over 5,000 years as a medium of exchange, wealth, and investment. Central banks and governments hoard gold as a strategic reserve. Bitcoin, on the other side, only 16 years old, it remains a young asset on the scale of history, still perceived as an experimental technology rather than eternal value. What conclusion should we make? Bitcoin has yet to pass the test of time like gold. Gold has proven its resilience over millennia. The second difference, market capitalization. The total amount of gold in the world, 15 trillion, is one of the largest markets among all assets. Central banks hold 35,000 tons, about $2 trillion. Bitcoin's market capitalization, 1.2 trillion. That's 20 times less than the gold market. In order to catch up with gold, Bitcoin needs to grow 20 times. So, what is the conclusion? Bitcoin cannot compete with gold in terms of scale, but it has the potential to grow if its perception changes. The third difference, volatility and stability. Gold, slow but steady growth. Its price is stable and doesn't fall 20% in a week. It is used as the main protective asset in times of crisis. Bitcoin price spikes. In 2024, Bitcoin could rise 30% in a week and then fall 20% in the next week. Huge influence of speculators. Large funds can easily manipulate the market. What is the conclusion? Gold is an anchor for investors in volatile times. Bitcoin is still a volatile asset that not everyone is willing to hold long term. The fourth difference: regulation and legal status. Gold, legally recognized by every country in the world. Central banks accumulate it as a reserve asset. Gold transactions are subject to clear laws. Bitcoin, restricted or banned in some countries, for example China or Turkey. Some governments are increasing tax controls and requiring disclosure of Bitcoin holders. SEC and other regulators are constantly introducing new regulations for cryptocurrencies. What is the conclusion? Gold is fully legalized asset worldwide. Bitcoin not yet officially recognized as a safe haven and face legal barriers. Fifth difference: who are the main buyers? Who is buying gold? Central banks like US, China, Russia, India, etc. Hedge funds and major investors. States accumulating reserves. Who is buying Bitcoin on the other hand? Private investors and crypto enthusiasts. Funds such as BlackRock, but in minimal proportions. Companies like Tesla, MicroStrategy, but their investments are insignificant compared to countries' foreign reserves. What is the conclusion? Gold is an asset that central banks buy up. Bitcoin remains an asset for private investors for now. Can Bitcoin replace gold in the future? What speaks in favor of Bitcoin? Digital nature. Easy to transfer and store. Transparency. Every transaction is recorded on the blockchain. A limited supply. 21 million coins makes Bitcoin a scarce asset. But what's stopping Bitcoin from becoming the new gold? Regulatory risks. Countries can impose harsh restrictions. Volatility. Bitcoin has not shown stability so far. Lack of confidence from central banks. What is the conclusion? Bitcoin has the potential to become digital gold, but cannot yet fully replace physical gold. Bitcoin is still perceived as a high-risk asset rather than a safe haven. So, which is better, Bitcoin or gold? If your priority is stability and capital protection, gold is your choice. It rises in times of crisis and is bought by governments and central banks. If you're willing to take high risks for the growth potential, Bitcoin is a high potential investment. It can grow tenfold, but its price can also collapse. The best option is diversification. Holding both gold and Bitcoin is a smart decision. Gold protects in a crisis. Bitcoin gives you a chance for high growth. So, let's summarize. Gold remains the main protected asset. Central banks are buying it. Bitcoin is useful as a digital alternative, but it's not yet replacing gold. The best solution is to combine both assets in an investment portfolio. Write in the comments which would you prefer, gold or Bitcoin. Subscribe, like, and click the bell. See you later.